In recent years, Walmart has been beating Amazon at its own game. And you can see that partly reflected in Walmart's valuation. Under some measurements, Walmart stock is more expensive than Amazon stock because investors have been impressed with just how much success Walmart is having against Amazon on its own turf. So I wanted to show you some data points here on how Walmart is beating Amazon at its own game. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Right, so one way Walmart is attacking Amazon is through even faster delivery. Now, Amazon has been known as the fastest delivery online business, but Walmart has been making inroads in that category. In fact, items delivered for their international business, same or next day, increased by 35%, and now 45% of those items are delivered in under 3 hours. Think of that. 45% of its international items are delivered in under 3 hours. So that's a strong indicator of the convenience value that Walmart is giving customers. And it wouldn't surprise me if in some transactions, Walmart can be faster than Amazon because Walmart has over 10,000 brick and mortar locations worldwide that it can use to serve customers more locally. Amazon doesn't have that. Amazon has a world-renowned logistics and fulfillment network, but if Walmart can utilize its network more effectively, it has the more uh, position closer to customers and the ability to be faster than Amazon at the peak level. So at its peak optimization, Walmart can be much faster than Amazon because of all those brick and mortar locations. And Walmart is nowhere near its peak operating capacity at that business. So now over 50% of their members transact digitally in Sam's Club, online or in person. And that's important for Walmart because a digital transaction, is more profitable for Walmart. It doesn't need as many cashiers if someone is purchasing digitally using the digital solutions in Club. So now that Walmart with Sam's Club is seeing that consumers are using these sources, it can expand to more locations, to more availability. And unfortunately, it's going to lead to fewer cashier jobs, but better profits for Walmart in the long run. Speaking of profits, Walmart achieved e-commerce profitability both in the US as well as for the global enterprise in the first quarter for the first time in its history. So, up until this point, Walmart had been investing billions and billions and billions of dollars into its e commerce business and had not yet turned a profit on that business. But the first quarter, the recently completed quarter, for the first time, the company generated profits in that business. And it would be reasonable to assume that these profits will grow to the billions, the tens of billions, and in the very long run, the hundreds of billions of dollars as the percentage of people spending money online compared to in person continues to increase. It's just so much more convenient to shop online. I don't think that trend will ever reverse. And so more and more spending will happen online. And Walmart is now in a position to benefit from that trend rather than where it was, let's say, 8 years ago. It was in a position where it was losing because of that trend, because it didn't have the competitive advantages in that online shopping compared to everyone else, especially Amazon. So it kept losing market share in e-commerce. But now that it's put both feet in and it's achieving great success, now it stands to benefit because it's so much smaller than Amazon in e-commerce and it's growing so much faster than Amazon in e-commerce. The trend will benefit Walmart more so than it will benefit Amazon in my estimate. Additionally, in the US, e-commerce net delivery costs have declined as they've continued to densify their last mile deliveries and as customers pay fees for faster delivery. So again, this is Walmart's physical presence paying dividends for Walmart and investors because people are paying for faster delivery. So Walmart is giving people an option saying, thank you for shopping online. We can deliver this item to your doorstep in, I don't know, 3 days, 4 days, whatever the promise might be. But also, if you want, we can deliver this item to you in a couple of hours if you pay $6.95 or $9.95, whatever that fee might be in the moment. And more often, people are saying, you know what, it's only $6. I'll pay it. I'd rather have the item in a couple of hours. And so people are paying for that option more and more frequently. And I'm seeing that evidenced in Walmart's results, but also in Target's results, because Target has also benefited greatly from that offering. It has reported that customers choose that a lot more frequently. So this option, Amazon can't offer as compelling for customers. It doesn't have an offering like Walmart does for this service. I've seen something resembling this from Amazon, but not quite yet. And if Amazon keeps observing consumer behavior like what Walmart is talking about here, Amazon could invest to have that capability, at least in the largest cities that it operates inside. It could develop that capability relatively quickly to match Walmart in this category in at least a few select cities. It won't be able to match Walmart everywhere because, like I mentioned, Walmart has over 10,000 brick and mortar locations, and it even has locations in some areas that are not that dense in terms of population. And so, would it make sense for Amazon to invest in those areas to compete against Walmart, which already has a presence in those smaller towns, in those more rural areas? And so, Walmart has carved itself out a category where it beats Amazon at its own game at fast delivery because it has that close proximity to so many customers worldwide. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.